Stop what you're doing right now. I don't say that lightly. I don't open videos this way for engagement. I open this way because what has happened in the last 72 hours in the precious metals market is the kind of event that, if you miss the context behind it, you will spend the next 6 months trying to understand why your portfolio moved the way it did. Watch this video all the way through. Every section builds on the last. If you jump out halfway, you will have half a picture. And in a market moving this fast, half a picture is more dangerous than no picture at all. Here is what we are looking at right now. Silver is trading at $95. PAXG, the tokenized gold instrument that tracks allocated physical gold in real time, is at $5,600, approaching its all-time high. And physical gold in China is trading at $5,560, with a $282 premium above the international spot price. Each of those numbers individually would be a story worth covering. Together, in the same 72-hour window, with the geopolitical backdrop we are currently sitting inside, this is not a market story. This is a monetary system story. And the difference between those two things is everything. I want to be honest with you about something before I go any further. When I look at these three data points together, the silver price, the PAX level, and that China premium, I feel something I don't feel often when I'm analyzing market. I feel like I'm watching a system communicate something that most people don't have the framework to hear yet. Markets speak in data before they speak in headline. The headline comes after the move. The data comes before it. And right now the data is not whispering. It is speaking at a volume that, once you know how to listen, becomes very difficult to ignore. What I'm going to walk you through in this video is not a prediction. I want to be clear about that. I am not telling you silver goes to $150 or gold goes to $7,000. I am telling you that the specific combination of signals we are seeing right now, silver at $95, PAX near all-time highs, and a $282 physical premium in China simultaneously, has a meaning that goes far beyond any individual price target. And that meaning, once you understand it fully, will change how you interpret every precious metals headline you read from this point forward. Let me build this carefully, because each layer of this story only makes sense in context of the one before it. Layer 1, silver at $95. Let's start with what silver at $95 actually represents structurally. This is not simply a price milestone. Silver crossing $95 means it has broken through every major technical resistance level that institutional algorithms have been programmed to defend for the better part of 3 years. The $30 level was defended. The $35 level was defended. The $50 level, the 1980 all-time high that became a psychological ceiling for an entire generation of traders, was defended, and then it wasn't. When price breaks through layered resistance of that magnitude, it is not doing so on retail buying alone. The volume profile behind a move like this requires institutional participation. It requires sovereign participation. It requires a category of buyer who is not making a speculative trade, who is converting currency into metal because they have made a decision about what currency is worth. That is a fundamentally different kind of buying than a retail investor purchasing silver eagles on a bullion dealer website. And the fact that silver has reached $95 tells us that category of buyer has been active in this market at a scale that has finally overwhelmed the structural selling that kept price suppressed for years. Layer 2, PAXG at $5,600 near all-time high. Now let's talk about PAXG, because this data point is the one most traditional precious metals analysts are not tracking, and it may be the most important signal of the three. For those unfamiliar, PAXG is a blockchain-based token where each unit represents 1 troy ounce of allocated physical gold held in Brink's vaults in London. It trades 24 hours a day, 7 days a week, including weekends and market holiday. It does not close when the COMEX closes. It does not pause when New York goes home. What PAX near all-time highs tells us is that the demand for verified, allocated, instantly transferable physical gold is at a historic extreme, and that demand is not waiting for market hours. It is not patient. It is not willing to queue in the traditional system. There is a category of capital, global, mobile, and increasingly distrustful of legacy financial infrastructure that is using instruments like PAXG specifically because it does not want exposure to the institutional plumbing of the traditional gold market. It wants the metal, it wants the verification, and it wants it now. When that category of capital is pushing PAX to all-time highs at the same moment silver is trading at $95, it tells you something critical. This is not one trade. This is not one narrative. This is a broad, simultaneous flight into hard, verified, allocated asset across multiple instruments, multiple geographies, and multiple buyer profile. Layer 3, physical China gold at $282 premium. And now we arrive at the number that, if you understand it fully, reframes everything else. Physical gold in China trading at a $282 premium above international spot price. Let me explain precisely what this means and why it matters more than almost any other data point in the global gold market right now. A premium of this size in China does not happen because Chinese retail investors woke up feeling optimistic. A premium of this magnitude is a structural signal. It means that the demand for physical gold within China's domestic market is so far outpacing the supply of physical gold available through normal import channel that buyers are willing to pay $282 above the international price just to have metal in hand today rather than wait. This has happened before. In 2013, when China was quietly accumulating gold at an institutional level, while Western investors were selling ETFs, the Chinese premium was a leading indicator that absorption of physical metal was happening at a scale that the official numbers were not capturing. The difference now is the size of the premium and the context surrounding it. A $282 premium in the current geopolitical environment, with active conflict zones affecting global trade routes, with dollar weaponization fresh in the institutional memory of every non-Western sovereign wealth manager, with BRICS nations actively discussing alternatives to dollar-denominated settlement, is not a market inefficiency. It is a policy signal wearing the clothes of a price signal. China is not paying $282 above spot because it miscalculated. China is paying $282 above spot because obtaining physical gold right now, at any price, is considered more important than waiting for a better entry. That is a statement about perceived risk that goes far beyond any conversation about price target. Now here's what these three signals mean together. Silver at $95, PAX near all-time highs, China physical gold at a $282 premium, all in the same 72-hour window. Individually, each of these is a notable data point. Together they form a pattern that has a precise historical name: monetary system stress. The simultaneous, multi-instrument, multi-geography flight into physical and physically backed hard asset that historically precedes, not follows, a fundamental shift in how global capital prices risk. This is not a commodity trade. This is not a momentum play. What we are watching in real time is a segment of global capital, sovereign, institutional, and increasingly retail, making a collective judgment that the current monetary architecture carries a level of risk that needs to be hedged at a scale and urgency that was not present 12 months ago. The word in the title of this video is deliberate. War. Not just the geopolitical kind, though that is absolutely part of this picture, but a war on the credibility of the paper monetary system that has been the operating infrastructure of global finance since 1971. And when that war accelerates, hard assets do not move gradually. They move in steps. Sharp, violent, repricing steps that leave the unprepared on the wrong side of a trade they didn't know they were in. These are not interpretations built on ideology or precious metals bias. The PAX price is verifiable on chain in real time. It cannot be manipulated by a single institution. It reflects genuine market demand for allocated physical gold from a global buyer base, operating outside traditional market hours. The China gold premium data comes from the Shanghai Gold Exchange, the largest physical gold exchange in the world by volume, where the price differential between domestic Chinese gold and international spot is published daily. The silver price at $95 is confirmed across COMEX, spot markets, and physical dealer pricing simultaneously, meaning this is not a futures anomaly. This is a full market repricing. And the COT data supporting institutional positioning shifts in both gold and silver over the preceding 90 days shows a pattern of commercial short reduction combined with managed money-long accumulation that has preceded every major sustained precious metals move in the last 2 decades. The data is not ambiguous. The interpretation requires context. You now have both. Here is what most channels covering this story are going to do. They are going to take the $95 silver price and build a straight line projection to $200 or $300. They are going to call this the beginning of the greatest silver bull market in history. They are going to use the China premium and PAX data as confirmation of whatever price target generates the most excitement. I'm not going to do that, because the honest analysis of this moment is not about a price target. It is about understanding the mechanism, understanding why these three signals appeared simultaneously, understanding what category of buyer is driving each of them, and understanding what historically happens to markets when monetary system stress of this magnitude becomes visible in the data simultaneously across multiple instruments. The person who understands the mechanism is always better positioned than the person chasing the number. Price targets create excitement. Mechanisms create strategy. You now have the mechanism. I need to ask 3 things from you, and I want to be direct about why each one matters. First, like this video, not for vanity metrics, but because the algorithm is actively deciding right now whether this analysis reaches 10,000 people or 100,000 people. Your signal is one of the inputs into that decision. And the more people who understand this framework before the next leg of this move, the better. Second, leave a comment. Tell me, are you currently holding any exposure to silver, physical gold, or PAX? Are you watching the China premium data? Had you connected these 3 signals before this video? I read these comments carefully. Your answer directly shapes what I cover next. Third, share this video with one person before you close this tab. Not to grow this channel, because you almost certainly know someone right now making precious metals decisions based on the price alone, without the context of what is driving it, without understanding what the China premium means, without knowing what PAX near all-time highs is telling us about the category of buyer currently active in this market. That person needs this context before the next move happens, not after. I want to end this video with something that matters more than any price target I could give you. What you witnessed in the last 72 hours, silver at $95, PAX near all-time highs, China physical gold at a $282 premium, is a moment that will eventually be obvious in hindsight. Every major market inflection point looks obvious after it happened. The data was always there. The signals were always visible to anyone who knew how to read them. The difference between the people who benefit from these moments and the people who watch them pass is almost never intelligence. It is almost never access to better information. It is almost always timing and framework. Understanding what you're looking at before it becomes the headline rather than after. This channel exists for one reason: to give you that framework before the moment arrives, not to sell you a price target, not to keep you anxious enough to click tomorrow's video, to give you the kind of understanding that makes you calmer when everyone else is panicking, and more deliberate when everyone else is chasing. You now understand what these three signals mean individually and together. You understand the mechanism behind the China premium. You understand why PAX near all-time highs is a monetary signal, not a commodity signal. And you understand why silver at $95 represents something structurally different from silver at $35. That understanding belongs to you, now. Regardless of what the price does tomorrow, war has been declared on paper. The physical market is responding. Make sure you're on the right side of that distinction. Invest with logic, not hype.